with the employment report on July, the Sahm rule crossed the 0.5 percentage point threshold. And so it's indicating a recession. Are we in a recession? My expert opinion, looking broadly, is no, we are not. But that increase in unemployment rate that we have seen over a year plus is very disconcerting.
Mm-hmm.
Right? We're not pointed in the right direction in terms of where we're trending.
This is why I really loved your Bloomberg opinion piece yesterday, because it feels like a lot of people are coming on talking about your rule and how that is de facto then we're in a recession as reason for the Fed to do something maybe bigger or an emergency way. And you come out with an article that says U.S. isn't in a recession despite the indicator. My recession rule was meant to be broken. What does that mean?
When we think about this cycle from the pandemic on the last 4.5 years, the disruptions to the U.S. economy have been in many ways unprecedented. And in particular, we've had some really big disruptions to supply, which are typical boom and bust indicators, recession, high inflation, low inflation. Those are about demand. And so the Sahm rule, in my opinion, is getting overstated by some of the really abrupt shifts in labor supply in the last several years. And that's just some of the unemployment rate increase is the good kind. It's people who've come in, want to work, they will get jobs, it'll be growth. But in the interim, that looks like the unemployment rate rising. In the recession, there's some of the bad unemployment in there too. So that's where it gets really hard. And, it's difficult to hear. I'm happy to have sparked a robust conversation. This is really, really important to know if we're in or headed towards a recession, because there are policy actions that can be taken. And so, I'm using the tool and other data just like anybody else.
So, Claudia, what do you make of an unemployment rate of 4.3%? To me, in my experience, that's still low. I guess if you want to get concerned about the trend, i.e. it's moving higher, that's a concern. But in and of itself, 4.3%, how does that kind of stack up for you?
Right. So if our concern is about the direction we're pointed in, are we headed towards a recession? Are we in a recession? The relevant metric is the change in the unemployment rate.
Okay.
I mean, the level is important. Sometimes it's unsustainably low. Like earlier when we had the labor shortages, the unemployment rate in the United States, when it got down to 3.4%, that was because we were missing some workers too, right? Like that wasn't going to stick. So sometimes, within bounds, sometimes the level does tell us something. But at 4.3%, this is very much consistent with the demographics of our workforce. We have an older, more experienced workforce. 4% unemployment, that's much more like you would expect or predict. So that 4.3 is not like, oh, wow, this is really low.
Right.
It's not sustainable. And we've gone into recessions in the past with lower unemployment than now and also higher. So the level itself is not a protection against a recession.
Paul pointing to himself when he said older workforce. Seasoned. We think seasoned. Experience. Claudia, to that point, how do I understand the fact that you had a huge move in the bond market when initial jobless claims came out? They're volatile, they're seasonality, they change, and yet we're having such market sensitivity to that. Where does that kind of tell you about where we are?
Right. Well, this is very much this question about the dynamics, the recession, right? This isn't about the Sahm rule, but it captures it, right? This is why the Sahm rule's worked historically, is you get periods where the unemployment rate starts coming up gradually, and then it picks up steam, and then it goes up a lot. And we had some signals that we're in this stage. It's been going up slowly and gradually, and with the July employment report, things looked like they were picking up steam in the wrong way. And so that's the concern. And then what we're looking for in claims data is that momentum there, or was it just the weather or this or that, and so I think that's this reaction, because we're kind of on this, it's not like we're on the knife's edge, but the dynamics are like it makes a big difference at this point if the increases in the unemployment rate speed up or not, because once they get going, they tend to, you have these negative feedback loops. And then you're not talking about a 0.5 percentage point increase in the unemployment rate, you're talking about a 3 percentage point increase.
Wow.